All right, this is Dorian LPG Limited. This is part of my small portfolio that I just started this year in what I'm calling my fun account. So this is not part of the investment club. This is just my personal account. But I wanted to do this not only for good record keeping, but also to introduce those of you that may not know about this particular company. So LPG, all they do is transport natural gas from the United States to the rest of the world. That's it. Nothing more, nothing less. And so when you are investing in this company, when you are buying shares of ownership in this company, what you're literally buying are the boats that they are using to transport this natural gas. And so this is a list of all the boats that they have. And this is as of 2021. In 2024, they have about 300,000 more, so maybe about five more boats than this currently in the waters operating. Wanted to show you just real quick kind of what this looks like. Right now, liquid petroleum gas, which is what natural gas is right now it's being exported record numbers from the United States and it's going to the Mediterranean, it's going to Europe, and it's also going to Asia. Okay. Now, as we know, because of this issue with Russia and Ukraine, Europeans have stopped importing natural gas from Russia. And so they have to get it from elsewhere. And right now they're getting it from the United States. There's also a lot of natural gas going to Asia. That is also sort of a political issue dealing with the Russia stuff. But right now there's a drought in Central and South America. And so it is difficult to transport the natural gas through the Panama Canal because the water levels have been much lower than normal. And so, because of that, they are giving priority to other ships other than natural gas to get through the Panama Canal. So, that's been an issue. But outside of that, though, the U.S., like I said, is exporting a record high 20 million metric tons. And right now, LPG is in the neighborhood of 2.1 million metric tons. So about 10% of the natural gas coming from America is getting shipped through these guys. So I think they're in a really good place. Another thing that I thought was really cool um, about this company is that their financing is coming from Japan. And if you don't know, Japan has historically record low interest rates on debt. And so if you're going to go out and get a loan for anything, you want to get it from a place like Japan. And so they have a lot of, well, I'm not going to say a lot of debt, but they do have loans and debts on the books, like most big companies do. But their interest on those loans are going to be much smaller than a company that is getting financed through American or European banks. Now, this company is headquartered in the United States. Their charter was originally out of the Marshall Islands, which is a territory of the United States, which is also on some of the main shipping routes between Asia and the United States. So, sort of a strategic thing there, but they do have a U.S. headquarters in Connecticut as well. All right, one of the things that is currently giving them an issue is that legally they have to park their boats at terminals for some period of time. No different than the truck drivers in the U.S. Have to be off the road for so many hours after being on the road for so many hours. So ships work the same way, and the fees that they pay for docking in those terminals are increasing. You can see here by more than double over the last year, and so that is an issue. I do expect that to change though in the near to far future. But right now it's way up there. Um, Another thing, just kind of looking at kind of what the natural gas looks like worldwide. The U.S. accounts for 50% of the natural gas that's on the ocean, so seaborne, right? Natural gas is also coming out of the Middle East. It's also coming out of Russia, and a very, very small amount coming out of some other countries. So 50% of all the world's natural gas on the ocean is coming from the U.S. And we're talking about a U.S. Born company. And then 63% of all of the natural gas that is on the ocean is going to Asia. And like I said, right now, Asia is having issues because of the Panama Canal has low water levels. There isn't much natural gas coming from the west coast of the United States. And so you have to get around that Panama Canal to ship that stuff to Asia. And so that's an issue for LPG. But again, something that I expect to change here shortly. All right, let's get into some numbers here. Just real quick, want to talk about sort of kind of how I did this. So there's always going to be restricted cash for these guys, and so I included that in cash. Let's see what else. Dry docking is actually referred to as deferred expenditures on their books, but it is literally dry docking. And then the other assets are, as best as I could tell, are literally like furniture and stuff. Now there was here you can see, small numbers. 2023, it was like 48,000, 54,000, and this was listed as just like furniture, right? But here in 2024, all of a sudden it jumps up to like 2 million. And there was just nothing in the notes, nothing in the reports that mentioned what that was, other than possibly investments, right? The problem is that they also listed the investments separately as well. And that's what this 1299 number is here. So I wasn't able to figure out what. Oh no, did I lose that number? I did. I know it's 1299 something. Oh no, I'm gonna have to go find it. Um, so yeah, so I just wasn't able to figure out what that was, and so I just left it there. There were there were there was another sort of other category that I completely left out for assets because again there was no notes or no information concerning what it was. So I left it out. There was other liability that I did include. I've worked for some of these Fortune 500s, and a lot of times when you have an other liability account, it literally is just sort of a garbage account where they don't have any other place to put it, so they just throw it into this other category. And so I left it in, even though we don't know exactly what it is. We have to, and that was actually 2023. I left it in because I'd rather be more conservative than not. I'm gonna pull up this 2023. And grab this number real quick. Um, the other thing that I pulled up here that I wanted to talk about was the insider buys, and these are the officers. And you can see over the last year, there's actually had more sales than purchases. Same thing over the last 3 months. And so usually that is a sign that the officers and the people in charge themselves don't believe that the company is going to do any better now than what it did before. Um, and so that is a bit concerning. Um, and that's the reason why it was so important that I do this analysis. Um, that being said, I always kind of go slow with these new investments, and so I only bought 25% of the total amount that I had budgeted for this particular position. And so what happens is, as the price decreases, I purchase the second quarter, the third quarter, then the fourth quarter. Well, I purchased this, I want to say October maybe. And since then, I have purchased three more quarters, or two more quarters rather. So I'm getting down to my last purchase of this particular company. And so I wanted to make sure that I wasn't throwing good money after bad. Um, and a lot of times when you are looking at those insider buys, that can give you a really good idea of where the company is potentially going because yeah, I don't know why for some reason I'm not able to click on able to click those links. All right, so looking for other fixed assets. So yeah, so this was the 48 for 2023. We're looking for 2024. Something's not right here. There we go. Okay. Yeah, see, derivative instruments. So it is their investments, 1299,869, 1299,869. Okay. So it is their investments. So again, what this other is, I don't know, but I left it there either way. I don't typically like to do that. And so anyway, so what I do is I grab 3 years of data, okay, 3 years of data, and you can see the differences from year to year. So from here to here, cash balance decreased 3%. From this year to this year, it increased almost double, right? And then I do some simple statistics to try to get a prediction of what 2025 is going to look like, right? And so you can see here, this is an average of the all the changes, and this is a standard deviation between each year. And so what we then do is we just kind of decide, okay, but given these four choices, right, where do we think 2025 is going to go? All right. And so that's what I've done here in these categories. And then it gives us a total here. And then what I do is I look at the total here and kind of compare it to our statistical numbers here, just to make sure it kind of falls in line, right, with what's possible. But then also to compare it to historical numbers, right? So we see 2021's at 158, and then a small increase there to 1.6, and then 1.7, now 1.8. So we can assume that it's going to continually increase, and we can see here that we do have a small increase. And again, this is based on the prediction of these numbers, right? And it just so happens that the sum of these predictions is a small increase from 2024. And so I feel good about that. So I think our numbers are decent there. Same thing goes with the liabilities. I haven't looked at what this is, the 695. And so we see a decrease, which is kind of what has been. Um, yeah, you see an increase and then you see some decreases, and so it can kind of go back and forth. We are at 695, which again kind of puts us in line with our statistical numbers here, um, and it is pretty far down from where we are now, but it's decent. Okay, and then we have the net. This is whether or not the balance sheet is growing or falling, right? And so we see that over the years, we see that the balance sheet has pretty much decreased every year. Um, and so the question becomes, is it going to continue to increase or continue to decrease? And it looks like the better number is somewhere closer to this 9.6 or 9.4, um, versus the high end of 12.32 or 12.10, especially based on what we know about what the officers are doing, and as well as kind of what headwinds they're facing short term. Whether or not that turns around within a year, who knows? But let's play around with some numbers here and see if we can get a better um, total down here, at least a higher total. So um, I know one of the numbers is the lease. Now, the lease is a lease that they're leasing a ship. Okay, so they own most of their ships, but they're leasing at least one. And so this is the lease contract. And so we have that predicted at 10.5, and it's currently 17.5. So let's move that one up. The problem is we don't have a good number to really increase it by. And I thought about making these numbers smaller so they are easier to deal with. But this one is the 7 is 333. Yeah, that's 9 digits. And this one is 10 digits. So that's too high. And this one is 9 digits and it's a 2. So let's go with that one. So we're gonna increase the lease. Maybe they lease another boat, or maybe for some reason the lease increases. I don't know why that'll happen, but all right. With the debt, um, that puts us at 570. We're currently at 579. Um, let's increase the debt. That gives us a net of 1034, which I think is small enough. The dividend is another interesting one. So this company just started paying a dividend in 2023. Maybe they had a dividend prior to 2020. I don't know, but I listened to the earnings call, and the CEO was very persistent in saying that this company does not have a dividend, right? So what they call it is irregular dividend. So if they have additional cash on the books, they will decide if they want to purchase more shares or if they want to pay a dividend. And over the last 2 years, they've decided to pay a dividend, which is really cool for shareholders. The dividend is a dollar a share, which, let me look at this. Uh, it's a 4% dividend, so it's not crazy, but it's nice, right? A little extra cash. Um, and so anyway, so for the last 2 years, they've had a dividend. Um, being that things are not awesome right now, whether or not they continue to pay a dividend, I don't know. The officers also benefit from having this dividend, so um, I don't know what to do about that. But let's go ahead and increase it. Um, just to get our number, and we're still at 1034. The other liability, like I said, they didn't offer any information as to what this is. I'm pretty sure it's just a throwaway account that they use for just random stuff that doesn't necessarily fit, but important uh, enough to say that when it goes into a liability account, that means that they aren't paying it, right? So imagine what happens is you're this huge company, you do, millions of dollars of transactions on a daily basis almost, right? And you have this team of accountants that's working to manage and organize all of this. And they get an invoice for some random thing. And the way it happens is that you have these managers that are over certain departments within the company, right? And those managers approve expenditures, right? And so if you have an invoice that comes in, um, the first thing the accountant is going to do is to look to see if the manager has approved this. Is there a PO? Is there a purchase order? If there's no purchase order, then a lot of times the accountant will then be tasked with going to that manager saying, hey, did you approve this? Well, sometimes what happens is you go to the manager to say, hey, did you approve paying like, $100,000 for this thing? And the manager was like, oh, yeah, I did approve that. And I just forgot to do a PO. Or sometimes you have a salesman, right? Because I'm sure this company has salesmen that go out and try to get new business, right? Those salesmen have all kind of weird expenses for things that, you know, $10,000 dinners and crazy stuff like that. Well, if you don't have a purchase order, then you can't just pay it out. You're not supposed to anyway, right? That can be considered embezzlement. So what you do is you throw it into a liability account until you can get some type of paper trail or some type of permission to pay this thing. And that's why a lot of times you have on these big public companies, you'll have this other liability account that has absolutely no information about it whatsoever because inside that account, it's just a bunch of BS and stuff that no one knows why it's there, but you have to put it somewhere because it's you received an invoice, so you have to do something with it. So I included it just because it ought not to play any it ought not to have any sort of meaning or change in the financials of the company at all. But as you can see, I've tried to increase this thing as much as I can, um, and even increase it far more than what it is currently in 2024. And the liability has gone up significantly, 878 versus 772. That's pretty big. But our net is still 1034, which is less than where we are currently. So we still have a declining balance sheet, which isn't awesome, right? For a company to have a declining balance sheet. And that's a lot of the reason why I think the stock price is doing what it's doing. All right, so let's take a look now at the book per share. And so what this means is you simply take the net balance for the books and divide it by the number of shares. Okay. Now, this company is buying back shares. And so that means that the share count is going to reduce. Anytime the share count reduces, the book share price goes up, which is a good thing. Okay. When a company sells shares, then the share count goes up and the book to share price goes down. And so this company did sell some more shares in 2024. So you can see the difference there, about 6%. When they do that, they do raise cash. And they're typically raising cash to buy assets. In this case, to buy more ships or maybe to pay for the lease on a ship or something like that. And then you have price to book. And price to book is just saying what the stock price is versus what the book share price is, right? And so typically, when you buy a share of a company, you want the price to book to be 1-to-1 ratio, meaning that if this company were to sell every single thing, right, and then pay off all their debts, at the end of it, how much money are they going to have, right? And you want to make sure that as an investor, you're in a position to where if this company sold everything and paid off everything, dollar is still going to it's still going to be a dollar, right? So as of right now, the price to book is 0.96. So that's really good. It means it's under one. And so that means that either the share price is undervalued, meaning it needs to be a bit higher, or it means that there is something going on with this company that the market itself doesn't quite know about, that's going to cause the price to continue to decline, right? So either of those things can happen. All right. And so what we do is statistically, we figure out what's the lowest possible price this company can be at, what is the highest possible price this company can be at. And we see that the lowest is roughly $13, the highest is $30. And again, this is based historically on what the price to book has been. Okay. So if we go back and we look here in 2020, the book was 0.86. The lowest was 0.31, which is really low. And that's kind of how price to book works, right? Like, you know that the price to book can never be like zero, right? No, I mean, the company, unless the liabilities are way above the assets, or something like that, the company is bankrupt, right? Then you would have a zero price to book. But as long as the company is not bankrupt, there ought to be some decimal for this price to book. The question is, what is the lowest it's going to be? Because that's when you want to purchase the shares, right? Imagine buying the shares when they're 0.31 and then selling at 0.86. Like, you're going to make a lot of money. And I think that's what a lot of people are doing with this particular stock, is they're trading. Okay, I didn't look at volume and all that kind of thing, or technicals. Maybe I will. But for right now, it's just the fundamental numbers. My first time really doing analysis for this company, and I wanted to see what the numbers look like. 21, we see the same thing, 0.5, basically 0.7. And then in 2022, we see a drastic increase, 2023, 2024, right? Where the price to book is double, okay? And so what that means is people are willing to pay double the price for this particular company, because they see that there's going to be some great benefit, right, in the future. And we saw that in the stories about the U.S. exporting way more natural gas than what they ever have. And so that's what got me really interested about this particular company, is that you see this real exuberance, right? This real, looking forward to having some really great returns. And the question is, now this is the highest price it was in 2023. This is the highest price that it was in 2024. And I'm almost certain that these two numbers were sort of back to back, meaning that this was probably maybe the end of 2023, and then this was the beginning of 2024, right? And since then, it's kind of declined down to this 0.88. But keep in mind that 0.88 is the lowest price it has been in 2024, and compare that 0.88 to the numbers back here, right? You see this 0.31 in 2020, 0.47. So historically still high, right? So there's a lot of excitement and looking forward to the future, I think, for this company and the market. And for me too, right? And so again, statistically, we kind of look at where the price can possibly go. This price to book is based on a predicted book share price. Okay, so everything you see highlighted is a prediction. Everything that is white is not predicted. Okay, all right. So now let's take a look at the profit loss here. Oh, let me talk about share count. So again, historically, this company has reduced their share count through buybacks. Okay, and you can see negative, and it looks like they did sell some shares here, just a few. But then we see a huge share sale here in 2024, right? Now, the question is, does that continue? Listen to the earnings call
and it seems like the CEO is going to continue to purchase shares, and so I do expect the share count to reduce. The problem is statistically, I just I the closest thing was this 398 number, but that seemed to be sort of a huge drop from this 428, and so I used 458 to say that they're going to possibly sell more shares. Um, Hard to imagine that being the case when you have a CEO that's talking about purchasing shares and paying dividends. Um, just to show you kind of what the difference is, let's choose this 398 number. Okay. And now all of a sudden, you have a predicted price to book of 0.94, which is about where it is right now. And you have a minimum of $15 and a high of roughly 35. Okay. Versus 13 and 30. Personally, I'm fine with the $30 as being the high. But as you can see, depending on what the share count does, this thing really can get back to roughly 35. So let's just leave it at 4 or 5 for now. Maybe we can play around with it later. Okay. This is the profit loss statement. Revenue, that's a big one, right? So historically, just on average, the revenue does increase every year by average 6%. You can kind of see here we do have some negatives, but then we have this huge jump. And I think this coincides with, like I said, the Russia-Ukraine situation and Europe importing a lot more natural gas from the U.S. And I think that's going to continue, particularly in the near term. I imagine that if we do have some resolution with this Russia-Ukraine thing, there are going to be some agreements in place to start importing more Russian gas. But what those agreements are going to look like at the end of this, it's hard to say. It's really hard to say. You know, if there is some sort of ceasefire, it's very possible that the Eurozone says, okay, you know, great, we got this ceasefire. Let's crank up the Russian imports again, right? Or we continue to see sanctions that say, okay, great, we got a ceasefire, but we're not going to continue doing business with you, right? If Russia's on the losing end of this, then I imagine there are going to be sanctions long term on some of that natural gas, and then this company is definitely going to benefit. So, you know, really curious to see kind of where this goes. You know, excited about following this thing, but I do expect revenue to continue to increase near term. So, 393 is predicted value because we only have 2 quarters of the year you know, in the books. And so what I did was I just simply took the last 6 months of numbers and then just doubled it. You know, now that's not you know, an accurate depiction of what's going to happen, but it's just a simple idea to try to give us a number for the full year so that we can then look out towards 2025. So again, 395 is going to be an increase from the 2023 389, especially if we have the Panama Canal coming back online, which the earnings report does say is happening, that the water levels are continuing to increase. The drought is still on, but it seems like it's subsiding. It's now the rainy season, or at least the rainy season begins in January of 2025. So maybe those exports into Asia come back online and we're good to go again. So anyway, so revenue continues to increase. The voyage is just operating expenses. The charter is the expenses paid for the leased boat. And so I have that one actually roughly down. And we talked about increasing that on the liability side. If we increased it, let's see. If we increase the charter, we'll be looking at something like this. And we're looking at 2023 is at 23. And remember, this is the 24 number doubled. And so it may not necessarily be this, especially if there's no more expenses throughout the rest of the year. And it looks like it, but it does take a big jump sometimes. So let's just assume that maybe they're going to lease something else. And so we're going to have an increase of 23 to, let's put it at 35, because right now I think it's like 20 something. Okay. Fuel. I think that's gonna stay pretty consistent because I think that's not gonna change much. It's not like they're going to um, increase fuel a lot unless you have that many more boats, which I don't really think they are. See, it's been pretty consistent at that 70-ish range. Right now, the predicted value is like at 80, and that's where I have it. So I'm okay with that. Payroll, for whatever reason, has been consistent at about the 30 range. Again, this highlighted number here is a predicted value. Currently, it's at 26, and so that's 6 months. So why this number would be doubled like that, I don't know what's going on. Maybe it's gonna stay around the 30 range. So that's the reason why I stuck with the 46. So it's higher, but not as high as the 50 something. All right, sales. They don't plan on selling any boats or anything like that, so we're good there. This is other income because they do have partnerships with at least one other company that they do get some money out of. Interest, if they bring on new debt, then the interest is going to increase. You can see here that over the years, it's decreased. It was at 33, and I'm predicting 25. Statistically, it's really hard to get to that 33 number. Right now, it's at like 21. So I have it at 25. I think that's okay. Part of this interest expense is also interest income as well. And so as the interest income goes up, if interest expense comes down, then, this number can change quite a bit. And then investments. The investments is basically going to be derivatives. And so what they do is because their business is shipping natural gas, then they buy not only interest rate swaps to help with their interest expense on their debt, but they also buy natural gas contracts to try to basically manage how their business does with the cost of natural gas. Because as natural gas prices go up, demand comes down, which means they're shipping less natural gas. And so they try to make some money in the natural gas market as well. And as you can see, over the years, it's really been up and down, mostly down though. So right now, 61, and I have it at, yeah, so you can see negative there is a loss, but then you see we have a positive here. This is wrong. I just noticed that. It's not supposed to be a negative. Let me change that now. Okay. So yeah. So still negative. And so the question becomes, and it's negative right now. And the question becomes, does it stay negative or does it turn positive? I'm going to guess it stays negative, um, but I don't want to double it. So let's keep it at the 37. There we go. All right. So that brings our net profit to 56.3, which is an increase. And historically, the net profit has increased, which is great. You can see there was this 1 year where we had a decrease, but most years there's an increase in net profit. So that's really good. That's what you want to see out of a growth company. All right, and so earnings per share is literally the net profit divided by the number of shares. Like I said before, whether they purchase shares, reduce the share count, or sell shares to increase the share count is going to change this number. And then you have a PE ratio. It's the price to earnings. This is what you hear about all the time when it comes to how expensive a stock is or how expensive a company is. Right now, well, this is, again, predicted number, but you're paying twice what the actual earnings per share are. And so this literally means that every year this company is making $12 per every share of stock. And so technically speaking, that means that the stock price ought to move up by $12 every year. Of course, that doesn't always happen, but that's literally what that means. And so based on this, we have a minimum price of $15, a max of almost $40. And so the question becomes, does this company trade more on the profit loss statement or more on balance sheet? And I'm going to guess balance sheet. You see, 1330 is like $17, and 15 and 40 is $25. So what I'm saying here is that there is a smaller difference between these two numbers. It's a more narrow range versus the profit loss is a very wide range. Okay. And typically, the wider the range, the harder it is to predict, right? It means the price can be anywhere in between these two numbers versus here, it's just a narrower range. So we're talking about 13 to 30, but both of these numbers are, pretty similar, right? 15 versus 13, it's not that big of a difference. And then 40 versus 30 is not a huge difference. But either way, I'm gonna guess the balance sheet right now. And then current PE is 1.9, and we're expecting that to go to 1.98. So I think that right now the company is fairly valued. I do think there is some potential upside. I do think that there is going to be some headwinds, but also some real tailwinds, depending on what's happening with the drought and depending on what's happening with the Russia-Ukraine thing. So, again, looking at the current price to book is right now is 0.96. We're predicting it to go to 1.08. So again, there's some upside there. And then again, looking at the profit loss, 1.9 versus 1.98. So again, I say fairly valued with some definite upside. The downside, let's look at that real quick. So the minimum price here, we see $13. And we come back and we look historically of where that price to book has been and where it can go. And we see that, again, looking over the last 3 years, it's been down to 0.31, 0.5, but the last 2 years, 0.73, 0.88. That tells me that I don't expect the price to really get any lower than there. $19, and right now it's $24. Okay. Again, statistically, it can. What am I doing here? OF. Yeah, statistically, it can get to that 0.57, but I doubt it. Seriously doubt it. Like some things have to go really wrong to get down there, with the exports being as high as they are. So I expect no lower than 0.85, which puts the price right about $19 as the minimum. And then again, as far as the maximum, we know that it can get up to two price to book, and that puts us at $40. 45, 46, almost 50 is the absolute high that this company has ever been. And the only way for it to get there is we have to remove all of those headwinds. That means that the price for the terminal fees has to come down, and we also have to see more going out into Asia as well. If we see both of those things happen, and OPEC doesn't drastically increase their natural gas, and unless we see some kind of crazy deal happen with the Russian natural gas, I think that we can definitely get back to that high, but it's going to take quite a bit to get there. Like I say, right now prediction is for $1.08, not anywhere near that two number. And then again, looking back at the profit loss, historically, the PE has been this. You see 0.78 on the low, 2 for the high there. And then every other year it's been right around that one. In the last 2 years, again, this is just what we see in the on the balance sheet as well. The PE got all the way up to 4. And so right now the PE is at 2. So can it double from here? Again, there's a lot that has to happen for that to happen. But again, we know that the low is probably going to be right around that, maybe 1.5-ish, 1.6. I don't see it going any lower than that. And so that means that our minimum is again about 19. And if we look at the absolute high, that puts it at C. But again, it's not going to get there at all. Matter of fact, just for fun, let's see. Yeah. So again, if this company trades on profit loss, then, well, no, I say D. Yeah, if it trades on profit loss, then it gets closer to this 4 number, and it does put us at about $35. And again, same thing for the balance sheet. If it trades on the balance sheet, which I think it ought to, we'll know, I guess, later if that's the case, right? Then we'll see it get closer to this 2, which is basically there, and that gets us close to 40. So again, lots of upside, not a lot of downside. And if there is downside, we're looking at roughly 19. All right, from me to you, I'll holler.